Thank you, and thank you for coming. Uh, I will be here talking about the broad macroeconomic landscape in which you are going to run your business in the future. I will mostly focus on kind of long-term issues, which might at some point feel a little bit depressing because most of these long-term issues don't look particularly fascinating, especially if we think of industrialized economies. But I hope that you can take this as a kind of challenge or motivation for you, because if we're gonna ever break out from this low growth environment in Finland or in Europe, we're gonna need innovation, we're gonna need investment, and we're gonna need productivity growth. That's the only way to get out from this very low growth environment. But then I, of course, try to be a little bit more positive, because we have some good news from a cyclical perspective. If we think of the recent data that we have got from, for example, Eurozone, we can say that the business cycle is now starting to look more promising, and the global recovery is becoming a little bit more broad-based. We are not just dependent on growth in the US, but we are having some growth also here in Europe. And then as a final point or a final part, I will have a kind of digression in a way that I will be talking about something that has nothing to do with the previous items, but I hope that you could find a little bit interesting, because I'm looking at how demographic trends can affect market valuations, and there you can get some hints when to have, for example, your IPOs in the future. Okay, but let's start with looking at the real GDP levels and how they have evolved since the financial crisis. And this graph really, it doesn't look good. If we think of the major industrialized economies, Euro area, UK, US, and Finland, we can see that the depression that began in the aftermath of a financial crisis, it was a serious drop in economic activity. And what was really surprising was that the subsequent recovery was extremely sluggish. Normally, when you have huge drops in output, then also the recovery is fast, but it didn't happen this time around. The US has been delivering some growth, that's true, but also the pace of recovery has been extremely sluggish by historical standards. And many economies like Euro area, UK, and Finland, they have been mostly stagnating since 2010, late 2010 or early 2011. And there are many people, many economists who have started to think of whether this is a kind of permanent state of things. Is this something that we have to start to learn to cope with and start to live with extremely low growth environment? And there are some very good reasons to argue that this actually might be the case. But I hope that there is enough innovation in this room and everywhere else here in this event to prevent this kind of scenario to happen. But first I would like to just go to the basic things, that what is actually GDP? What is gross domestic product? You might think that I now sound a little bit like a teacher, and actually you're right, because I used to lecture at the university, but bear with me, please. So gross domestic product, if you take a kind of supply side view on this, output is simply a product of two things. It's first, how much there is labor in an economy. So how many jobs there are. And secondly, what's the productivity or the average productivity of these jobs. It's really that simple. Okay, then if we want to talk about growth in terms of economic growth, then we can see that at least in the long term, the average growth rate will be determined by just two things, two elements. How fast your employment is growing, what's the pace of employment growth, plus then the pace at which there are productivity gains. And if I take a kind of long-term perspective, then I can say that changes in employment are actually surprisingly deterministic. Of course, in the short run, we have fluctuations along business cycles, but if we take a kind of longer-term perspective, it's basically demographic and demographic trends that determine how much your employment is growing. So how fast the working age population is growing basically determines how fast employment is growing. This is true in 10-year, 20-year perspective. Of course, in the meantime, you have shorter periods where business cycle is the driver, but in the longer term, it's demography. And then talking about productivity gains, well, that's far from deterministic. That's you, basically. That's innovation. The only way to improve efficiency within an economy, improve productivity, is innovation, and then invest and then increase employment. Okay. Having said that, I now make few comments of each of these elements. And first of all, let's look at the average annual change in working age population that is estimated to occur over the next 20 years in different regions in the world. And as you can see here, there are huge differences between different areas or different regions. Africa, for example, will exhibit something like 2.5% growth in working age population over the next 20 years. So that means that the population dynamics alone will contribute on average 2.5 or 2.4 annual growth to your GDP. Whereas, for example, in Europe, the working age population is actually shrinking. It's shrinking at a pace like 0.5% annually. This means that we have to run faster just in order to stay where we are. I mean, we really need a lot of productivity growth to prevent the economy from declining. Okay, this is just to show you that if we look at the history, this is now time span between 1990 and 2010, we can see a clear relationship between growth in working age population and GDP growth. In fact, if I look at the OECD countries, this population dynamics explains about 2/3 of the variation in GDP growth between different countries. And the 1/3 that is not here is then the differences in productivity growth. And okay, if we now think what's going to happen over the next 20 years, we're going to see in Europe minus 0.5% growth or 0.5% decline in working age population annually. That will mean that given that we will have that kind of productivity growth on average that we used to have in 1990, 2010, then probably Europe will be growing something like between 0.5 or 1%. So extremely sluggish growth. This is something that we have to bear in mind, that we are not going to see that kind of growth levels in the next 20 years that we used to have before the financial crisis. Okay, so the fact that the biggest problem is population dynamics. We would need lots of productivity growth to counterbalance that negative effect. But now we come to the biggest problem of the financial crisis, or the biggest legacy problem from financial crisis. We still have unresolved problems in the banking sector. So that if you look at, for example, fixed investments, the blue line in Europe, you can see that we are still going down. We are going south. There's been no recovery whatsoever in fixed investment. And to achieve productivity growth, we need innovation and investment, and that's not happening in Europe. We have had some recovery in fixed investment in the US, but even in the US, we are still below the pre-crisis levels. The key advantage in the US obviously was that in 2009, the toxic assets of in the banks' balance sheets, they were removed and the banks were recapitalized so that authorities were creating potential for the US banks to start lending again and creating possibilities for innovation and investment. And that's not been happening in Europe. And that's the key difference between the US and Europe in the aftermath of the financial crisis. And now I come to Finland, and this is how our situation looks like. We are also suffering from the legacy problems of financial crisis. If I now look at our total productivity, it's below the level that we saw 6 years ago, just before the Lehman crisis. So at the moment, we are producing less with the same resources that we did 6 years ago. And that hasn't happened for many decades. And the reason why we have had such a big negative productivity shock in Finland is basically that we've had very large drop in industrial production. That means that we have lost lots of high productivity industrial jobs, and that has reduced our average productivity. If we compare, for example, our industrial production to that experience in Germany, you can see that we have hardly recovered from the levels from the bottom levels of 2009, while Germany is pretty close to the pre-crisis peak level. Of course, if we look at the pre-crisis years, Finland was doing spectacularly well. It was outstanding, our industrial performance. So I think it's a little bit too early to say that we are now suffering from poor competitiveness. Because if you look at the years before the financial crisis, our industrial production was growing much faster than production in Germany. I don't think it's plausible to claim that we would have lost that competitiveness just within a couple of years. What I think is the main reason for the huge drop in Finland and why we haven't recovered yet, why we have stagnated since 2009, is that we simply have much narrower industrial base than Germany. And we have had big hits for some of our key sectors, and so it's natural that we exhibit more volatility in production than Germany. Germany's production or product portfolio is much more diversified, and so they are in a way better protected against this kind of economic shocks. I think I get evidence for my story about narrow industrial base if I look at OECD's unit labor costs. It is true, these numbers are unit labor costs in Finland compared to Germany. And now the time span here is from 1999 to 2011. And this is basically the euro era. And what has happened when we have been members in this monetary union? And we can see the blue line is total economy. Okay, we must admit that unit labor costs, which in a sense is a measure of your competitiveness, your cost competitiveness, it's been rising in the total economy. Unit labor costs have been rising much faster than in Germany. But if you take just manufacturing, you can see that our unit labor costs have been actually declining relative to Germany. So it's very hard to claim based on these facts that Finnish competitiveness would have collapsed after the financial crisis. Yes, it is true that, for example, wages in the public sector have been rising way too fast, but I wouldn't say that that is the case in manufacturing and in our core industries. So what should be done? Well, I think the top priority is to try to regain the productivity growth, because we really need that to counterbalance the unfavorable population dynamics. The situation in Finland in terms of working age population growth, it's even worse than in euro area on the average. And the only way to get productivity growing again and therefore also get the economy growing faster is to have sufficient amount of innovation and investment, and then when we have investment, then we can also have employment. And the second part here is that we really need to restructure the public sector. The welfare state must become much more efficient than it is at the moment. Of course, adverse demographic trends, they are here and they are a fact. And we somehow need to stimulate labor supply, because when firms start to innovate and they start to invest, they have to be sure that they can also recruit and hire people, and so we have to make sure that there is enough labor supply when firms really start investing again. And I think one good suggestion at the moment is that if in some sectors, especially in the public sector, not so much in manufacturing, but public sector and some other sectors, we do have some problems in competitiveness, I think a good idea is simply to work more with the same wage. That improves your competitiveness, but it doesn't reduce real income or disposable income. And that is good, because then you don't have the negative effect on demand, which could then again, slower your growth rate. Okay, that was basically the long-term part, and we now start looking at how the cyclical outlook looks like. Well, this is our cyclical monitor. We have 4 key regions here. We have US, Euro area, Finland and the BRICS, which are Brazil, Russia, India and China. And you should not worry so much about the numbers, just look at the colors. Basically, the greener the color, the better is the outlook, the faster is the economic recovery or the pace of growth. And we can see that the US has clearly outperformed all the other regions for at least since January 2012. And that the second observation is that we clearly had in our indicators a turning point also in Euro area sometime around February, March this year. And this is consistent with the latest GDP numbers that we got a few weeks ago about the second quarter of this year. And this kind of is evidence that the Eurozone recession is probably over. So problem is that the outlook in emerging markets, it's actually declining again, and it hasn't turned to positive yet. Of course, that's only a cyclical problem. I think I'm pretty sure that the BRIC countries on all the emerging markets, they will follow the developed markets to a better business cycle when we just get growth properly going also in Eurozone and not just in the US. Of course, if we take a little bit longer view, and if we believe IMF's estimates, and if we look at the countries that are estimated to grow over 4% per annum over the next 5 years, all of those countries are in emerging markets. None of them are in developed markets. So emerging markets really are those where the future growth potential is. I think especially Africa is interesting because not only the scope for huge productivity gains is there, but the population dynamics is much better than basically anywhere else. So Africa, I'm pretty sure that Africa is going to be probably the next growth miracle, so to speak. Okay, I may have a couple of minutes left, and this was the regression part. This is a relationship between market valuation measured by Shiller price earnings ratio and then investor spender ratio. I don't think I have time to explain how we define investors and spenders, but I can only tell that they are certain age cohorts. So that investors are older and spenders are younger adults. And if you look at the population or demographics, the population statistics, we look at the history and then make predictions about the future. We can see that when the investor-spender ratio peaks or is going up, the market valuation typically go up. The price-earning ratios goes up. So that is the earnings multiple that investors are ready to pay for your firm go up. So the last time the investor-spender ratio peaked was around year 2000 when we had the IT bubble. It would have been extremely good idea to have your IPO at that time. Of course, before the bubble burst. But next time when we're going to have the peak in the investor-spender ratio is going to be sometime around 2030. So you can now think of postponing your IPO to that kind of to 2030 to get the best price of your enterprise. Okay, thank you very much. I think this is, by the way, the bottom line of my presentation, that we will really need you and your firms and your innovation to stop this stagnation. So thank you very much.